factors affecting dividend decision. Next is access to capital market. Since the investors prefer to invest on the large and credit worthy, these companies seem to have an easy access the capital market. As a result, they need not depend entirely on retained earning to fund their new ventures. On contrary, the small companies rely more conservation of profits to fund for their growth projects. This is because they do not enjoy a ready access to capital market. Thus, the small companies are likely to pay lower dividends than the larger companies. Legal constraints. The management of company needs to abide by the provisions of the Companies Act while deciding dividend. Contractual constraints. The contractual constraints may also affect the dividend payment by a company. Like if a company has a huge debt burden, the lenders are likely to place restrictions on the dividend payout through certain clauses in the loan agreement in this regard. Shareholders' preferences. The consideration should be given to the desires of shareholders. Some investors prefer regular income in the form of dividend from their investment, whereas certain investors may agree to forego present dividend in pursuit a higher earnings. In short, if you are seeing factors affecting dividend decision, like in short, if you are seeing the earnings, the company likely to declare higher dividend if the earnings of the companies are high, whereas the company likely to declare low dividend if the earnings of the companies are low. Second factor, stability of earnings. The company likely to declare high dividend if the other factors are kept constant. A company whose earnings are stable over the years. The company likely to declare lower dividend if the other factors are kept constant. A company whose earnings are not stable over the years. Third one, stability of dividend. In short, the companies usually tend to adopt a wide variations in dividends, adopt a policy of stabilizing dividend per share, as a wide variations in dividend payout may adversely affect its goodwill. Next one, growth opportunities. If the company has lucrative forthcoming growth opportunities, it is likely to retain lesser portion of their earnings. For instance, if the company has lucrative forthcoming growth opportunities, it is likely to retain greater portion of their earnings for investment in these ventures. Next one, cash flow position. A company enjoy high liquidity besides high profitability, then the company likely to declare higher dividend. The company likely to declare lower dividend when cash flow positions of the company does not enjoy high liquidity besides high profitability. Next, taxation policy. The company likely to declare high dividend if the tax rate is low. The company can likely to declare lower dividend if the tax rates are high. Stock market reactions. If the a company can declare high dividend when it's create a positive impact on the investors because it leads to a surge in its market price as well, whereas a company can declare lower dividend like when stock market reaction may have a negative impact on the share prices in the stock market. If the company can declare high dividend, like access to the capital market, large and creditworthy seems to have an easy access the capital market and are likely to pay higher dividend than the smaller companies. The smaller companies are likely to pay lower dividend than the larger companies. Legal constraints. The management of the company needs to abide by the provisions of the Companies Act placed while declaring dividend. Contractual constraints means it may also affect the dividend payment of a company.